Hey everyone, welcome to the Stride to Freedom podcast. My name is Russell Benaroya, and I'm the co-founder of Stride Services, a virtual back-office bookkeeping and accounting firm serving hundreds of clients around the United States. This podcast is designed to help small business owners focus on growth and innovation. In other words, focus on those things that inspired you to start your business in the first place. We call it your Genius Zone. We do our job on this podcast when business owners feel like they have the trust and confidence to build the right team of partners around them that will help them grow. Thanks for joining. Let's go. Hello, everybody. Welcome back to another episode of the Stride to Freedom podcast. I am your host, Russell Benaroya. What is the Stride to Freedom podcast? Well, the Stride to Freedom podcast is designed for business leaders that are motivated to achieve their highest and best use. We help business owners get and stay in their zone of genius. What is your zone of genius? Your zone of genius is that thing that you do that is uniquely yours to own, where you lose track of time, where maybe you do it if you didn't get paid, but more important, you get acknowledged and recognized for this work. And you say to yourself, oh, I didn't really know that was a thing, but people are so impressed. The truth is that many business leaders don't spend enough time in your genius zone. So we created the podcast to bring guests on that are in the business of helping business leaders get in their genius zone and achieve their highest and best use. And we're fortunate today to have Larry Cobrin on, and we're going to talk about doing just that. Are you in, Larry?
I'm here.
I am in. Okay. My name is Russell Benaroya. As I shared, I am your host of the podcast. The podcast is sponsored by Stride Services. Stride Services is an outsourced bookkeeping, accounting, and fractional CFO services firm serving professional service companies like MSPs. What is our Genius Zone? Our Genius Zone is helping business leaders use data to make better business decisions. And it's so apropos that we have Larry as our guest today because he's like in the Uber business of helping MSP owners use data to make better business decisions. Larry is the founder and CEO of MSPCFO. For the last 10 years, Larry has built a technology that empowers MSP owners to achieve greater profitability and transparency with their data. And I'm going to let him jump in and talk all about it. But I've enjoyed speaking with managed service providers that have lauded Larry and MSP CFO for the impact that he and his technology have had on their organization. So really, it's a pleasure to see you, Larry, and to just acknowledge your impact.
It's a pleasure to be here. Thank you so much for having me on.
Such a pleasure. I want to penetrate, Larry, what I perceive to be a slightly stoic exterior again, but that's just the way I receive you. Not everybody necessarily does. So I want to get to know a little bit more about you before we dive into the what you do. I do hear that you like waiting for fresh bread to rise and hiking with your dog. What's the deal there?
The fresh bread is obviously just a sort of cliche COVID. I got into sourdough bread making, and it was quite a treat. We, when COVID struck and you couldn't get flour in the store, I found a restaurant supply place that would drop off 50-pound bags of flour, and we started going through those about once a month. Which I don't know if you're responsible for shopping, but that is an awful lot of baking that we did during COVID. It kind of tapered off as many COVID activities did. And the walking with the dog, that's how I start my day every morning. Before anybody else is up in the house, I'm out between 5 and 5:30. There's a trail about 1.7 miles, not far from the house. The dog and I go for a hike. I listen to a podcast. That's how I spend my mornings. And it's sort of my peaceful time. And that's how I get my day started. I come home and then I see the kids off to school.
What is a podcast that you're listening to that's capturing or captivating you right now?
So I do like the serial ones that come out. There aren't that many right now that are getting me, but I do like one of the ones I listen to every week, twice a week is, I don't know if you know Pivot with Kara Swisher. She was the tech writer with the journal and marketing professor at NYU. Listen to New York Times, The Daily. And in my world, we are a bootstrap startup. So there are several bootstrapped company that come out, podcasts that come out every week that I try to listen to.
What is one adventure that you're planning this summer that you are either really excited about or might break you out of your comfort zone a little bit?
Oh gosh. At my age, I don't get out of my comfort zone that far anymore. But one of the trips that my wife and I are taking, we do this every year, is we go up to Stowe, Vermont. We stayed at a nice little hotel. There's a 5-mile bike path. We go into town again. I don't know if I call it adventure as much as something I really look forward to. And on the ride back on that 5-mile path, about halfway, there is this fantastic restaurant with an outdoor bar. Get a soft pretzel, a flight of beer, and I am in my happy place.
Heaven.
Yes.
Sounds so nice. Terrific. Let's jump in and talk about MSPCFO. I'll give you the floor to give me some and give all of us some background on the business, and also equally interested in your decision to start it and the method that you've used to capitalize it, which, as you just shared, is a bootstrap business. So let me give you the floor to take us to the promised land.
Gosh. So to really see where I got here is to see where I was before. And I was at a division of Citigroup that got bought by Morgan Stanley. I was there from 2006 to 2010, which covered the period of 2008 when sort of financial markets almost stopped spinning on their axes. I was at the end of that, my tenure, I was given the opportunity, as I like to put it, to spend more time with my family, which it really is one of these situations when somebody says to you, when one door closes, another one opens, and you find that to be so trite when they say it to you. But with a little perspective, it's true. I wasn't happy there. I had met a former friend at Morgan Stanley who was at a startup, and she looked happier than anybody I saw at Morgan Stanley. So I started looking in the startup space, and I ran into a friend of, as it would be, a friend of my wife who had an MSP, and he said, "Listen, we have a real problem with analytics, and I think this is something we can do." And he at first thought we'd be outsourced in a similar way to what you do, outsourced accounting and bookkeeping services. And I said, that's really, I don't have the expertise for that. But what I have done in my career is I have done analytics. So we started breaking down how to look at MSPs. We started pulling data out of, at the time it was just ConnectWise, now it's ConnectWise and Autotask, and realizing how much data truly is in there. And the perspective that we always have taken, and he left the business a long time ago, so it's, I say now we as in the company, is that if you look at a managed service provider, there are ways to look at it that's similar to a multi-store retailer. And by that, I mean, if you're a multi-store retailer, you have 10, 20, 30 stores, and each one of those stores has to make money in accounting parlance. That's the four-wall contribution of a store. Well, some stores make money, some stores don't. And your job as a operations manager is to figure out which ones make money and do better of those and fix the ones that don't. Well, MSPs are similar, but they don't have stores, they have clients, they have agreements, they have projects, they have engineers, and they should be able to break down which ones are doing well versus poorly. And we started to do the analysis on that to break down which clients are better or worse. And again, to stick with this whole retail metaphor, in retail, the way they look at it is sales per square foot, because a bigger store is going to do better than a smaller store. So you want to kind of normalize it. Well, for MSPs, we look at it as how much gross profit are you earning per hour you spend servicing that client. And we were able to show, maybe you have a big client that makes money, but 2 smaller clients are better than that one big one. And maybe you should reevaluate your portfolio. And we started the business. We started doing analysis in Excel, sharing files via Dropbox, pulling data out with ODBC connections. And we realized that what people were asking was started to have similarities. We were answering the same question. We were preparing the same worksheets. So we moved it over to an application. We built the application from scratch. We outsourced development, and we eventually brought it in-house. And we've been doing this now, selling the software, for about 7 years. Best job I ever had.
Congratulations. It's, yeah, I think when one door closes, the other door opens is resonates with me. I mean, I wrote a book on a similar topic, and the topic is really around you're in control of designing the life. You have the privilege of architecting your life, of being a creator, and you did, right? You created something and built something that mapped to the way that you wanted to build your life. And I appreciate that. What complicates solving this problem for MSPs? So you're solving a problem for them, but what otherwise complicates getting that information through a source other than what MSPCFO could help them do?
Well, I can tell you, doing this for as long as I have, some of the stuff is complicated. You know, if from the simplest perspective, if you look at working on an agreement and you want to say how productive your engineers are, well, you can't look at the gross value of the agreement. You should really look at how much labor there is, because if you sell like a large BDR device, like $1,000 BDR device on a $3,000 agreement, and you want to calculate the effective hourly rate, how much you're earning per hour of labor, you didn't sell them $3,000 of labor, you sold them $2,000 of labor and $1,000 of product. And that is a very simple way of doing it. A lot of our partners do it much more complicated. Like if you sell $75 a seat, but you throw in $15 of tools, but it's all in one line item. The sort of disentanglement of product and labor is a real complication. And a lot of people don't fully make that effort. And what you can do is you can make good clients look bad and bad clients look good. And the whole goal is making improvements to your business, and you want to do it in the right place. Other complications that we have are, or other complications people have for doing this, and this I think is sort of a global thing, and we talk about this when we speak at groups, is averages camouflage problems.
Mm-hmm.
So, you know, we always look at a client and we say, well, what's your effective hourly rate? Let's say they're targeting 150, and they calculate their fixed fee labor, they calculate the fixed fee hours they put in, and it works out to 150. They may say, well, we're good. Let's move on. Let's focus on another part of the business. And what we say, well, before you move on, let's look at your whole portfolio of clients. It averages to 150, but you have some clients that are just awful, that it's, you know, 70, 60, 50. And you have some clients that are wonderful, where it's $500 because they never call you. If you say you're done, what you're missing is the fact on one side, you know, you're potentially have clients that you can improve. They're already doing business with you, and you can focus on how to improve them. And there's an upside potential for existing clients. You're not selling. Well, maybe you're upselling a little bit. Maybe you're just fixing operations. But on the other side, these clients that are paying you $500 an hour, it's not going to be too long before they sort of scratch their head and say, well, maybe we should put this out the bid. I never see these guys, see these people. So a lot of the complications people have is not going deep enough, not being careful enough with the numbers. And then obviously the sort of foundational issue is using the PSA correctly. You know, they think, oh, the data's in the PSA, it's fine, I get my invoices out. Well, getting your invoices out and having the quality of data to do analytics, it's really two different levels.
Which is what impresses me so much about what you've built. I have a story, which you'll clarify in a second, that you don't provide as part of the service a disproportionate amount of consulting, but you'll clarify this for me. But I have the sense that, hey, like, we don't have to provide a ton of consulting because the software is pretty intelligent. But then I get thinking, boy, how people set up their ConnectWise Manage instance and how they're mapping to certain cost items has a big impact on what populates into your software. So I'm curious, how do you manage that? Like, there's so much variation, I imagine.
Well, you got to remember, as I just said, I came to this business from working at a large bank.
Yes.
Before that, I had worked at a consulting firm. I had worked at a hedge fund. I'd worked in private equity. I'd done a whole bunch of different things, but not an MSP. So people sometimes will say to us, you know, I've been doing this long enough that I definitely consider myself part of the community, but people will say to us, how do I set this up in my PSA? And I say, well, I know how it should look when it comes out of the database.
Yeah. But
we're not front-end consultants. And we're really fortunate that in our industry, there is such a depth of coaching, of consulting, of advisors that are available to people. So we try really hard. We're not very good at it, but we do try to draw a line and say, listen, we will provide the software. This is what the software will tell you. We'll tell you when the software says data is bad, but you are better served by talking to an implementation specialist or talking to the PSA provider and buying hours from. However you do it, get somebody who is a front-end person who understands this. And we will work with them. We'll tell you if it feeds the data in better. But yeah, we really rely on the community to help our clients. And you know what? We're not the only reporting platform out there, but I'd like to think whatever we recommend they do to going out to cleaning up their data would be applicable if they left us and went to somebody else. If you have bad data, no reporting platform has as much value as it should. So,
have you always had this philosophy of the rails or the swim lane with which you will fly, or have you felt the urge to expand and then for whatever reason ran that experiment, decided not for us, and came back into your lane?
So it's funny you should say that. So in my heart of hearts, I've always said that I wanted to be a software company. Software companies, I mean, I could speak to you directly about this. Software companies versus consulting companies are much more scalable. Consulting companies, you sell 40 hours a week, you have to hire a new person. And hiring really frightens me, because then we're very, very careful about what we've done. And you have to have quality control to make sure that you have the right people promoting your brand with the product that they deliver. I was never comfortable with that. For any number of reasons, I was never comfortable. So we try not to. That being said, I live in the product. If I have a client that comes to me and they say, well, what should I do? I could start popping around in the application, and within 5 minutes, I'll give them 4 recommendations what to do to fix their business or to fix their data. It may take them 2 hours to do what I can do in 5 minutes. There are many, many things I do much slower than other people, but this is my product. I know how things work. And we're always trying to make it easier for people, but it's an art and it's a struggle, but we always work towards that. So we had contemplated selling almost managed services hours around MSPCFO. We have a user group that we convene every once in a while. I think we're due to meet again. So I have to get that on the calendar. And I mentioned that to them, maybe we could sell some hours. And to a person, they told me no. They told me all the challenges that I would have of providing a managed service around the product, and that I shouldn't. So we started leaning towards it, and then we were pushed back pretty hard by people we trust.
Good to have good people around you that'll give you good, honest feedback. When your clients are successful with MSPCFO, what are some of the decisions that they're making from analyzing or getting insights from the data?
Sure. So, to the point that I was making before, people have a portfolio of clients. And what we really try for is highest return on effort. And by that, we mean how small can we make the problem? Like if you look at your P&L and you're at, I forget, I think 21% is what service leadership or others may say is like best in class EBITDA margins. If you're at 15%, you want to add 6 points. The question is, how do you get there? Maybe I'll raise prices. Maybe I'll change the tool. Those are big, complicated issues. So what we like to do is look smaller, and we can look at an individual client and say that, perhaps here's one that we always use as an example. This was somebody that had a client of ours, a large client that had a large accounting firm as a client. And accounting firms, the tax rules change every year. Accounting software as such is updated, and as such crashes because it's constantly being dynamically updated. They were doing a heck of a lot of work supporting this line of business software. We identified that client as having an outlier in its operations. The amount of money they were getting paid for what they were covering was about average compared to their clients, but the amount of work they were doing compared to what they were covering, whether it's people or machines, was disproportionately high. So we found that this was an operations issue. Then from that operations issue, we took it down to it's a line of business issue. And we had a conversation with them. We talked it through them. I happened to be fortunate that I could talk it through with them on the phone. And their takeaway was that they went back to that client and they said, listen, we're not going to handle your software issues anymore. We are an infrastructure company. We will support what we sell, but this is outside of our game plan. And that dramatically changed their profitability. That added a couple of points. One relationship added a point or two to their bottom line. And that's what we try to do. We try to find small, discrete opportunities where somebody can add a point or two to their bottom line. And you string a few of these together, whether it's, they're having with issues we see now. Some people have a lot of turnover, so they're dealing with a lot of install iMac, install, move, add, change of machines. Well, what they've decided is, it's above and beyond what they should be providing, and they cap it. They say, well, you'll get a certain number per quarter. If you go above that, you pay. And now they're getting paid for the work that they're doing for these clients that have very high turnover. It's being able to narrow the issue and know that if you can fix that narrow issue, you'll get a small or mid-sized bump to your bottom line. And that's what people go for. That's what we're trying to sell.
I really like the effect of grounding stories with facts. We tend to live in a world of stories, and they're not always grounded in facts, but like, look at the data, look at that individual customer and what it's doing to you, and like, look at whether or not you have a lever there to influence it. Do you allow clients to turn reporting out of MSPCFO external to their clients so that they can use data as a basis for conversation around getting into better alignment or a better shared agreement with that client?
It's not designed for that.
Okay.
But that being said, one of the things that we do very often, we're very involved. We've been a sponsor of Evolve into, back when it was HTGA, for most of the time we've been in business. And one of the earlier meetings I went to, one of our earlier clients showed that we have a chart that shows how many hours you're delivering versus what you expect to be delivering for what they're paying. If you're shooting for 150 effective hourly rate and it's a $3,000 agreement, you want to deliver 20 hours. If you deliver 30, then it would show 10 hours below the line. If you deliver 5, it would show 15 hours above. So what he did is he used that chart. So it's month by month, whether you're above or below the line, as a bar chart. He showed that chart to a client and said, listen, this is sub-economic for us. And I think good business people don't want their vendors to do them a favor. They want good business relationships. And they said, listen, we're going to have to raise your prices. And they said that chart was very effective in helping them have an open and honest discussion with their clients and allowed them to raise prices. And here's the interesting thing. So when they were below the line, if it said, 100 cents on the dollar to get it back up to where they wanted it, they would ask for 100 cents. And then they would find clients that were consistently above the line. And they would say to those clients, listen, I know we're charging the right amount for the machines or people that we're covering, but you guys are using not enough time. And that we want to give you guys a rebate, something along those lines. And they gave them a discount of 25 cents on the dollar, which, if you're paying a vendor and they're getting their job done, their machines aren't breaking, it's always nice to pay less rather than to pay what you were paying. So they had their great clients who now are paying less and are much more stable and now in love with them. And they had their bad clients on the road to more profitability. So there are certain points that people use to make a client facing, but they're very, that was completely unanticipated to me. I sat in the meeting and I was shocked that he shared it because it's not designed for that. Our system times out after half an hour. It's not meant to be left on the plasma. This is very much for the C-suite or the operations manager to focus on and find opportunities to improve their business. So yes, there are times that it happens, but they're not anticipated. We don't create outward facing stuff. People find uses for it.
Well, let me, for everybody that is listening to this, even if you are not an MSP, but you are a professional services business owner that's trying to run a business on a subscription basis or some kind of monthly recurring fixed revenue, what Larry is articulating may be the most important analysis that you can do in your pursuit of maintaining profitability in a subscription-based environment, which is what, Larry, you were really referencing was this concept of the shadow bill rate, right? Like there is some number of hours times some amount of hourly rate that you are implicitly charging and maybe losing money on that client because you are fixing the amount of revenue that you're generating. But if you don't know that, that's red zone.
Yeah, we actually have a number. So effective hourly rate is something that's much more common. We also have this number we call pricing efficiency.
Yeah.
Where we literally do exactly what you discussed. Because in the PSA, there is a billable rate for every time entry. If you have a call center person that bills out at 125 and you have a level 3 project engineer that bills out at 250, we actually, for every time entry, we build essentially a fake invoice. And we say, you delivered 2750 of value. Well, let's compare that to what you actually did bill. And then that gives you your efficiency. There are people that are smarter than us that would say your efficiency should be about 1.3. Because you have tools, you have automation, you have all these benefits, you have a standardized stack with these clients. So that's what your sort of narrow target is. But the nature of our client's business is they are insurance policies. They are there when bad things happen. Things will go up and down. So they recommend that you should get active if the client goes out of like a 0.8 to 1.5 range. Below 0.8 means that you're doing too much work for what you're getting paid. Above 1.5, they become a flight risk, and you have to reassert your value. But yes, exactly that. We use that term, shadow billable.
Yeah, I love it. I love it. Let's go back in the way back machine here. I'm not a huge fan of looking back and, oh, should have, could have, would have. But I'm curious, 10 years ago when you started the business or thereabouts, what did you anticipate at the time? Like, what were you thinking this could be? And I'm curious, when you reflect a little bit on where you are you exactly where you want to be? And I'm not saying where you want to be relative to where you thought you were going to be, but the environment changes, you adapt, you change. It's been 10 years. Take me back what you thought.
Oh gosh. So I would say the product is largely doing what we had thought it would do. Being able to help people quickly find problems in their business. When we had anticipated this, when we were doing work on spreadsheets, we're doing it better than we had been doing it before. We're constantly iterating the product. We always want to make it better. It's better than it was a year ago. It's not as good as it's going to be from a year from now. I mean, if I'm being honest with myself, I would say that I thought people would embrace it more so and quicker. I mean, I love the product. I think it's great. I think it's super useful. I get people on the phone all the time, and I show them on just a demo call with their data, this is what you can do. But I get it. This is, I would have thought it'd been better embraced, but it is, we're doing very well. We're very happy. You always think things are always slower than they end up being, but that's fine. The challenge that we have is that, when we sell our service, and this is true of I'm sure any software, people who actively use it get a multiple of the value easily. People that don't use it, every penny they spend for us is wasted. So they should also look at what the investment of time is. And if they're not going to use it, if they have other issues they're working through, that was something I should have understood better, that this isn't the only thing. Like if they're dealing with employee issues, I mean, I remember when I was sitting in a Evolve meeting, they used to allow us, they constantly changed the rules, but we sat in on when clients talked about their issues. And I'm sitting there saying, this is how you squeeze an extra 0.75 points out of your EBITDA. And we have partners who are saying, well, this is how I dealt with the cocaine problem in my office. People have other issues that sometimes trump 0.75 points of margin. And that's not something I really considered. I thought, oh, we're giving them more money. Well, there's other things that people need to focus on.
Yeah. Tell me a little bit about your pricing journey and experimentation that you've undertaken on pricing MSPCFO, because to your point, those that do use it, they get a multiple of value, like huge multiple.
Well, it's recurring. If they can fix agreements, then they get multiples every month.
Yeah, exactly. So I'm curious how you've wrapped your head around the pricing for your service, what kind of experimentation you've done, and just how you think, what's your pricing philosophy?
Quite frankly, we came out and originally with a price of $300 a month for the standard service. We didn't give it a ton of thought, to be honest. It was a standard price for tools, so we thought we'd fit in there. About 2 years ago, we raised the prices by about 15%, the only time we've ever really meaningfully raised our prices. And we're still trying to evaluate how we do things. We charge a little extra if you have different logins. And we're considering, given that we are a database-based service and larger databases take up more space and we pay more to Amazon to analyze, and we want to actually make things bigger so that these larger companies can be analyzed. We are thinking about a surcharge and we have to decide where this line will be, but for very large companies, for new clients. But yeah, I mean, it's funny. So 2 years ago when we raised prices, I lost sleep over this for a long time. And we put it through, we said, this seems reasonable. Like this, I thought about so many different scientific ways to get there. And I thought, let's just make it a round number. We went from 300 to 350 a month. We lost, 3% of our clients, but these are mostly our zombie clients who kind of woke up and said, we're not really getting value, so let's not pay more. I wish there were more science to it. We just kind of went with gut feels.
Mm-hmm.
And our goal has always been, we don't monetize the data. Our goal has always been, we're going to build a great product and we're going to try and get scale and make money that way.
If you were to dangle out in front of us questions that you are trying to help your clients solve that are still pretty hard to solve, what else, as you look on the horizon, would MSP CFO like to be able to help their clients answer?
So there is some stuff we're working on right now, which is really just sort of connecting the dots, telling a full story in one question. Where's a bad client? Is what's the source of the unprofitability? Is it because of the project or the engineer or the agreement? Usually it's the agreement, but not always. If it's the agreement, is it because it's mispriced or because the operations? If it's the operations, where is that coming out? In our system right now, you go through 4 pages. We want to string that all together so we can say, hey, you have a client that's killing you on VPNs and you have an opportunity to make 0.5% more margin if you fix it. So that's something we're doing, really just stringing together, like tiering the logic. Other things that we'd like to do is and this is a huge challenge for us, and I've been very slow to go there, is benchmarking. Let's again stay with this example of the VPN or the new machine setup. How long does it take you versus how long does it take the community? The challenge that we have with this is it requires standardization. That when you call a new machine setup, somebody doesn't call a 3-step process with 3 tickets, and you call it 1 ticket, because then you can't really make a comparison. We've really, really fought against benchmarking. I have a gut feel what's good and bad, but that's something I'd like to be able to do with confidence, and I haven't been able to get there yet.
Are there companies in other verticals that do offer a similar value proposition to MSP CFO, but for another industry, like, I don't know, digital marketing or something? I don't know, maybe it's Google Analytics, that you ever have come across where you're like, oh, I'm kind of inspired by that, or I can learn something from looking at other industries?
When I started this business 10 years ago, we thought we'd do this for a little while and then go into another business. There are, I think hospitality does a lot like with this. There's some really great tools there. I think medicine sometimes tries, although I don't think they try hard enough. And there's various industries that have it. We just really haven't had the time or ability to go into other industries.
Yeah. What is it about the managed service provider industry that you have just really taken to, been smitten with, appreciated?
I mean, there's a couple ways to answer that. From a personality perspective, I kind of like the people. I go to these conferences a couple times a year. I really enjoy saying hello to people. It's really enjoyable to me. I like the percentage of people I like is far in excess of what I would have expected going to a business conference. Really nice people, really interested, really motivated. And I actually catch them at a time when they're trying to make an improvement in their business. So it's really been great. So that part about it. And I think there's a mutual value. I think they value what we provide, and we value their feedback and what we find from them. I've said to our clients many times that, I'm kind of smart, but our client base is collectively a genius. So we always are learning from them. And that's been really wonderful. Like the fact that they're always trying to improve their business, I will pick up tidbits all the time that we could try to build into our system or build into our way of thinking. So that's from a more personal side of it. From a professional side of it, what I love about this space is sort of the standardization. There are peer groups that these people all share ideas. There are conferences where 2,000 people will be in the same hotel listening to the same speech. There are PSAs of which there are 3, 4, maybe 5 major players. As opposed, when I did a healthcare startup, and there were 700 EMRs 15 years ago. So this is a much more standardized space from a business perspective that allows you to sort of live and scale within it without getting too broad. So
that's why I love it too. We've been focused on the MSP segment for less time than you have, but for the last year and a half or so, it's been, that standardization's been so awesome, and the community's terrific. What is something people might find surprising about what it takes to operate a business like MSPCFO in the way that you've chosen to structure it?
1 second. 1 second. Sorry, give me 1 second. Let me just grab the door.
Go.
My family we're going to cut this out and I'll come right back.
I love it. Love it. No problem.
Yeah. Okay. I'm sorry. Your question.
I assure you we won't edit this out. So no problem at all. We're all good. We'll just run with it. We'll run with it here.
Yes. So I'm sorry.
Yeah.
One more time.
Yeah. So what's something people might find surprising about operating and growing a business like MSPCFO in the way that you've chosen to structure the business and grow it?
Oh, I mean, people, I don't want to sort of say anything bad about our clients, but people are like, oh, how much do you have? And they kind of how many clients? And we give them a loose number. We don't tell them exactly what we have, but we're honest about it. We're around 300 plus clients. And they say, they do the math. I'm like, oh, you must be killing it. I'm like, well, we have a lot of expenses. It costs a lot to build the product. It costs a lot to maintain it. We have people that support the product. So that's something that people, I don't really get into it. I just say, yes, we're doing great. Thank you.
Mm-hmm.
But yeah, sometimes people don't have a full appreciation for all the expenses in keeping a business up and running. Mm-hmm. I guess that's one of the big ones. And then the other thing is we have clients all over the world, clients in the UK, clients in Australia. We get tickets coming in constantly. I get that shows up on my phone. I get people that want to chat on our website, and that's always on my phone. And it's sort of never ending. There is no work day, because if something happens, I have to jump on it right away. The reputation of the company is completely something that I want to protect, and if something happens, that I want to get on it immediately. Mm-hmm. I'm not perfect at it, but we try. So I have a flexibility that I can go on back porch and do work. I have a flexibility that I can drive my kids and go to a game. But if something happens on my phone, I will step away from the game and deal with it. Mm-hmm. Constantly being on call. And yeah, those are the big ones.
What is the next most important hire for your business if you were capitalized to make that hire? When you think about the function that you would want to solve for with a hire, what role would you fill?
So that's a good question. We actually just hired somebody. She started last week.
Okay.
Just a week ago today. She started into managing our customer success. We have 2 people that do it right now, but we wanted to be able to scale it up better. So we hired somebody to, again, apply systems and be able to scale that up. I think we're done for a while. Mm-hmm. But I will tell you, as a founder, in the first couple of years, aside from writing code, which we had a developer for, I was doing almost everything. And one of the, I have a peer group that I'm in that I was just talking to today at noon. We're a little bit more mature. There's some people that are still growing. And I said, I had a conversation. I showed him a slide I did from a talk I did at my 8th grader's career day a couple of weeks ago. And I said, one of the great things about doing this is when you start out, you have to do everything. You have to do recruiting, you have to do customer support and marketing and sales. And, I am the product person. I provide everything to developer to build. And then as we grew, I was able to hire. And one of the first hires we always had was sales. We've had a couple of people that have done it. And then I don't do that anymore. We have other people that do customer success. I dip my toe in from now and again, but most of our clients are supported by other people. We had to hire this year. We outsourced recruiting. We have an outsourced marketer. One of the nice things about being a founder and getting to a little bit of scale, which I think we have momentum, we have traction. There's always more scale that you can have, is you get to fire yourself from the jobs that you're not good at. When you start a company, you have to muscle your way through everything. And now I get to go closer to where I think my natural abilities are. It's a long-winded answer to your question. The next person we hire, I'm not certain. We have customer success handled, marketing, sales, development. We've added to those strategically. We would add underneath that. Mm-hmm. Mm-hmm. As I've said, I think we've hired the right number of, for now, sergeants. The next thing we hire are privates.
Last question, Larry. What is your zone of genius?
Oh gosh. My zone of genius. Let me, gosh, I know that I don't want to sound, my zone of genius, gosh. I don't want to sound falsely humble, but I'm not sure. I'm not super comfortable with calling myself a genius.
It's not,
So,
don't take it literally. How about, where do you get the most energy?
okay, there we go. That'll answer that. I get the most energy in solving problems. I find it fun. Everybody likes puzzles. Everybody likes what they like. I like puzzles. I like analytic quantitative puzzles. I was a physics major in college, and it's the same thing. I just made my problems a lot more interesting. Thank you for rephrasing that. My zone of genius is where I like to just be in my zone, is taking a real world English question, finding the data that goes along with that question, doing an analysis, and coming back with an English answer. I don't want to sit there and say, oh, your R squared is this and your slope, and you should worry about, I don't want any of that. I want somebody to say, how do I make more money? And I want to come back and say, you should carve out your line of business software from your managed service agreement. I will have a lot of data between the question and the answer.
Yeah.
And that's where I like being. But being able to go to English is where I enjoy being.
Oh my gosh. So powerful. That really demonstrates some empathy that you have for the customer that does not know all that sits in the middle. They want the English conversation, and acknowledging that and building for that is so hard to make it look so simple.
Yeah. The thing I think about is, do you remember the movie, the fishing movie? No, called The Fishing Moves, a lot of things. A River Runs Through It with
yes,
Paul Newman, or Robert Redford. I think he was behind it. And there were the two brothers were talking about fishing, and one of them was a prodigy. And he's like, you're sitting there and you're casting really well. He goes, well, I don't think about casting. I don't think as a caster, I think as a fish. And as a product person, as a vendor, I try to think what my clients want to know. Yeah. And that's where we try to, they don't want jargon. Some of our clients are great at jargon. That's fine, but that's not really where we need to do our best. We need to do our best making it better in plain English.
Yeah. Larry, thank you so much for spending some time with us today on the podcast. I've just wanted to get to know you for a long time. And so I figured, wow, why not get to know you and have you on the podcast simultaneously? Terrific. I learned a ton. Appreciate the wisdom, appreciate what you're doing for the industry. I am highly confident we should have more conversations, because I'd love nothing more than to find ways to engage together. But most important is I want folks on this show to appreciate what you're helping build to help a very large segment of business owners make better business decisions, and breaking it down into a small enough unit that they can in fact take action on it. So thank you.
Thank you so much for having me on. This is really fun.
Larry, such a pleasure. Have a great day, everybody. We will talk to you on the next episode of the Stride to Freedom podcast. Take care. Bye.